Now let's talk about the potential rewards and the potential pitfalls of using ROBS, the advantages and the risks.
Okay, let's start with the positive, the advantages. And I think the most obvious one, the one that jumps out at you right away, is that you get to use that retirement money without those big penalties for withdrawing early.
Yeah, that's a big one. If you take money out of a 401k or a traditional IRA before you're 59 and a half, in most cases, you're going to owe the IRS a 10% penalty on top of the regular income tax you'd owe on that money. It could be a huge chunk of change. But with ROBS, because you're rolling the money over directly into another qualified plan, you avoid those penalties. So the entire amount, all of that pre-tax money you've saved, is potentially available for your business. It could be a big boost to your starting capital.
So you're avoiding a big financial hit right away, which is great. But it's important to remember, even though you don't pay the penalty, that money's still coming out of your retirement savings, right?
Yeah.
It's going into a business, which, let's face it, can be risky.
You're absolutely right. It's not like the money is magically replaced. You've taken it out of your retirement account, and now it's subject to the risks of running a business. You could lose it. But for someone who has a lot saved up for retirement, maybe they've been saving for a long time and they don't have a lot of other options for getting capital.
Yeah.
Being able to tap into those funds without penalty can be a huge advantage. It lets them get their business going without having to take on debt or give up equity.
Okay, so let's nail down those advantages. No 10% penalty for early withdrawal. You get access to the full amount of your pre-tax retirement savings. It gives you a lot more money to work with than if you'd taken a penalized withdrawal. And it's particularly useful for those who have a lot saved in their retirement account but don't have a lot of other options for funding.
Exactly. Now, the other big draw, the one that we talked about before, is the debt-free aspect.
Yeah, being able to start a business without owing money right away, that's got to be appealing to just about everyone.
Oh, absolutely. With a traditional business loan, you've got those monthly payments, the principal, the interest, it all adds up, and it's a lot to manage when you're just getting started. But with ROBS, you're not borrowing money, so there's no debt. It's your money. And that means you can use that cash to grow your business, reinvest your profits without having to make those loan payments every month. It gives you a lot more breathing room in those crucial early years.
And operating without debt, that has to look good to potential investors or buyers down the road, right?
Absolutely. It makes your business much more attractive. Investors like to see a clean balance sheet, no debt weighing the company down. And buyers, they're more likely to pay a good price if they're not taking on a bunch of debt along with the business.
So advantages again, debt-free financing, no monthly loan payments or interest charges, better cash flow because you're not making those payments. It can help your credit score because you're not taking on new debt, and it makes your business more appealing to investors and buyers.
You got it. Now, another big plus with ROBS is that there's usually no credit check and you don't need collateral.
Yeah, that can be a deal breaker for a lot of people trying to get a loan.
Definitely. Because you're not borrowing from a bank, they're not going to pull your credit report. They don't care about your credit score. And they're not asking you to put up your house or, other assets as collateral. So even if you have some credit issues or you don't own a lot of assets, you can still use ROBS.
So you're not putting your personal property at risk and your credit score doesn't hold you back.
Exactly. You keep full control and ownership of your business assets, and you're not putting your personal finances on the line. It's much less risky from a personal standpoint.
So again, no credit check, no collateral needed. You keep full ownership of your assets, and this opens up possibilities for people who might not qualify for traditional loans.
That's right. And one more advantage, one that can be really important, speed. ROBS can often get you the money you need to launch your business much faster than other funding methods.
Time is money, right? Especially in the business world.
Oh, absolutely.
Yeah.
So if you're trying to get a loan, you fill out the application, you provide all your financial information, you wait. And you wait for the bank to make a decision.
Oh.
And even if they approve you, it can still take a while to get the money. Same thing with investors. Finding investors, pitching your idea, negotiating terms, all of that takes time. But with ROBS, it's your money. So you can typically access it much faster, which means you can get your business up and running more quickly.
So less waiting around, more doing.
Exactly. And when you have access to the money you need, it allows you to make decisions faster and take action more quickly. Sign that lease, buy that equipment, hire those employees, all without having to go back and forth with a bank or investors.
So advantages, faster access to funding, less time wasted on applications and approvals, more flexibility in implementing your plans, and it can help you make decisions faster. Okay, we've covered a lot of good stuff. But now we have to talk about the other side of the coin, the potential downsides, the risks involved in using ROBS.
Yeah, it's important to be realistic. ROBS is not a magic bullet. It has some real risks, and you need to understand them before you make a decision. And the biggest one, the one that everyone should be thinking about, is that you're putting your retirement savings at risk.
Yeah, I mean, you're taking money that's supposed to be for your future, your golden years, and you're putting it into a business, which statistically, most businesses fail. That's got to be a concern.
It's a huge concern. You're taking those retirement funds, which are, they're supposed to be protected, they're supposed to be growing over time, and you're exposing them to the risks of the market. And new businesses, well, they're risky. A lot of them don't make it. So if your business fails, you could lose not only your investment, you could lose a big chunk of your retirement savings.
It's like a double whammy, right? If the business goes under, you've lost your income and you've lost a big chunk of your retirement nest egg. Ouch.
Yeah, it's not a good situation. And even if your business is successful, even if it makes money, there's no guarantee that you'll earn as much as you would have if you'd left that money in your retirement account. Retirement accounts are designed to grow over the long term, and they benefit from compound interest, which is very powerful. You're giving that up when you use that money to start a business.
So, risks. Your retirement savings are on the line. You could miss out on potential market gains. Rebuilding your retirement savings later in life is tough. And you're not guaranteed to earn as much as you would have if you'd left the money in your retirement account. Those are some serious things to consider.
They are. And it's not just about the money, right?
Yeah.
There's also the complexity of it all. Setting up a ROBS is not easy. And then you've got all these ongoing requirements, rules you have to follow. It's a lot to handle.
Yeah, we talked about the complexity before, but let's, break it down a little bit more. What makes this so complicated?
Well, it's not just a simple transfer of funds. You're setting up a C Corp, you're designing and implementing a 401k plan, you're rolling over the money, you're having the plan buy stock. It's a lot of steps, and you have to get every step right. And then once it's set up, it's not over. You have to keep very detailed records, file reports every year, hold corporate meetings, keep minutes of those meetings, all that good stuff.